All right, so today we're going to dig into a really interesting and honestly super simple trading strategy. It comes from a source called Unique Trading Strategies, and they've named it the three candle entry exit pattern. The whole idea is that it's a purely visual signal for binary options. So let's break down exactly how they say it works. So that brings us to the big question, right? Is it really possible? Can a simple sequence of just three little candles on a chart actually give you a signal for a trading opportunity? Well, that's the entire bet the strategy is making. Let's see how it's supposed to be done. Okay, first things first, we have to talk about the absolute foundation of this whole approach, which is just spotting the core signal. And according to the source, it all starts by just looking at any three candles in a row. Now, this is where the terminology gets a little specific, but trust me, it's easy. In any group of three candles, you've got the first one, which they call the entry candle, and the third one, the exit candle. What about the one in the middle? Well, it doesn't even get a special name. But this simple naming idea, entry and exit, is the key to everything else. So, how do you actually find this pattern out in the wild? It is a dead simple two-step process. Step one, you just pick any three candles, one after the other. Step two, you look at the first and the third one, the entry and the exit, and you ask one simple question. Are they the same color? That's it. And here's the golden rule, the only thing you really need to remember. If that first and third candle match, if they are both red or they're both green, boom, you found the pattern. That's your signal. See? Pretty straightforward. Okay, so you found your pattern, but hold on, there's one more piece to this puzzle, the offset candle. All this is the very next candle that shows up right after your pattern. Think of it like a spacer. You find the pattern, you wait for this one candle to pass, and then you get ready. All right, so we can find the pattern. Cool, but what do we do with it? How does this pattern actually tell you whether to bet on the price going up or down? Let's dive into that. It really couldn't be simpler. If your entry and exit candles are red, that's what's called a bearish pattern. That's your signal to prepare for a lower trade. And if they're both green, you guessed it, that's a bullish pattern, and it signals a potential higher trade. So the color of the pattern tells you exactly which way to go. Now we're getting to a part of this strategy that's, well, pretty unique. It's not just about entry signals, it has its own money management system built right in. The source calls it a three-trade recovery cycle, and it's designed for one thing, what to do when your first trade loses. So here's how this cycle works in practice. You place trade one. Let's say it loses. No big deal. You immediately place trade two on the very next candle. If that one loses too, you get one last shot with trade three. But here's the most important rule. The second any of those trades wins, the cycle is over, you stop. It's all about trying to get that one win within 3 tries. And this is what that looks like with actual money, using the source's own example. As you can see, the investment ramps up fast. It starts with $50. If that loses, the next one is $115. Lose again, and it jumps all the way to $222. These numbers are specifically calculated so that a win at any step covers the previous losses and still leaves you with a profit. You know, theory is great, but let's see how this all plays out in a real-world example. We're going to walk through a live trading sequence, step by step, straight from the source material. So here's the scene. A bearish pattern has been spotted. That means the first and third candles in a sequence were both red. The trader is now just watching and waiting for the current candle, that's our offset candle, to close. The absolute second it does, the plan is to enter a lower trade. And you can almost feel the moment. The narrator in the source material literally says this as they're getting ready to click, their eyes glued to the timer, just waiting for that perfect entry. It really shows you how important timing is here. So that first trade for $50 is placed, and it's a loss. They were hoping for a red candle, but it closed green. But remember, according to the system, this isn't a failure. This is just the trigger. The recovery cycle has officially begun. Time for trade number 2. All right, trade number 2 is placed immediately on the next candle, this time for $115. And it's another loss. So now we're 2 trades deep into the cycle. Everything is now riding on this third and final attempt. So the last trade of the cycle for $222 goes in, and there it is, a winner. The candle closes red, just as the bearish pattern suggested it might. That single win is enough to wipe out both of the previous losses and end the whole cycle with a profit. And now the trader stops and just waits for a completely new pattern to form. So to pull this all together and wrap up, let's go over a quick checklist. The source really hammers home a few essential rules that they say are crucial if you're going to execute this thing correctly. Okay, here are the big ones to remember. First, your chart time frame and your trade's expiry time absolutely must match. That's non-negotiable. Second, and this is huge, practice this on a demo account first. Don't go in with real money until you're comfortable. Also, use that platform timer to nail your entries. Timing is everything. And finally, manage your risk. The source even suggests just aiming for one successful trade cycle a day and then calling it quits. And that brings us to our final thought here. The strategy itself, the pattern, it's a very simple set of visual rules. But when you look at that checklist, timing, money management, emotional control, it really makes you wonder, doesn't it? Is disciplined execution the real secret ingredient to making any trading strategy work? Definitely something to think about.